All right. All right. For those of you who are on, thank you so much for hopping on. Shanika, I see you made a comment. I don't see who's on yet, but thanks for hopping on. There's a lot to go through. Today was the first trading day of the year, and honestly, there was a lot that happened. I'm so glad to see that it turned out that way. The way we closed on Friday was kind of worrying, because it was the final day of 2025 and suddenly we were selling off. So it's nice to see that there's a lot of movers this morning, but the movers have been in industries that have kind of lagged behind. I want to highlight a few of them. I've actually talked about some sectors. I've already highlighted them here in my notes. I want to go through these one by one for the next hour or so. And then I'm also going to go into my scanner here towards the end of the day. That way we can kind of maybe put some other names on our scanner. The reason why I have SPY in the background is because we are trading SPY right now. We're actually in SPY calls expiring Monday, and we're up about 30% so far. And our target is about 687 to 688. So if you're in our group, we are holding those SPY calls, and it's looking like it's moving in our favor right now. We'll continue holding to see if it can continue higher. The cost on them is pretty low. They are high risk, high reward. We're looking for about a 100% return if it hits that 687. But meanwhile, while SPY does that, let's go ahead and pull up some of these industries and sectors that we're talking about. I want to first highlight China stocks. And the reason why I'm going to go with China first is because this is kind of what's causing the overall market to move. So we have BABA, which is up 6%, and we have Baidu up 15%. Baidu is up 15% because they announced that they will be spinning off their artificial intelligence unit, which is huge news. And not only that, there was another company that went public on the Hong Kong exchange, and it rallied 75%. So this company, let me actually go ahead and pull that company up for you. Its name is, we mentioned it here this morning. So it's not on the American market, but it is on the Hong Kong market, which makes it pretty important. So here we go. Byron. So Byron's stock 75% surge, and this is an AI company. They're a semiconductor design company, and the fact that they're public on the Chinese market, it brought a lot of life to Chinese stocks to kick off the year. You can see Baidu rallied because they're involved in AI. Baba rallied because they're involved in AI. And other companies that are Chinese listed on the American markets also rallied. Now, with that being said, because the rally was induced by this semiconductor move higher, we saw a lot of names that are involved in this space start moving higher. For example, ASML or other semiconductors. ASML is one of the most important companies across the globe, in which supplies semiconductor manufacturers with critical technology. And so this company has doubled in the last 12 months, and the news that China is digging deeper into artificial intelligence and semiconductors is only good news for a company that sells critical components to the industry. So think of ASML kind of like the NVIDIA, but they're more on the manufacturing side rather than design. So they're super important. You can see that they're up 9% to kick off the year just because China is entering the game and they expect to see higher demand because of this. Memory stocks also surged. Micron continued its rally. The stock is now up from $61 in the last 12 months to $314 this morning to a new record high. So that's also a big mover. With that move came a move from a company called SanDisk. So remember SanDisk? We used to hold their little flash drives back in the day. Now they're moving even higher because memory is such a big place. So memory and energy are a really big bottleneck in artificial intelligence. And you can see that SanDisk, which is a memory company, and Micron are both moving higher. And then we come back around to Clean Energy, which is also moving higher based on this news. So FLNC, which is Fluence Energy, clean energy initiatives, and they're trying to provide energy to data centers. big mover. Same thing with Bloom Energy. Today we saw them move. Bloom Energy saw a massive upside move last year, and it has corrected over the last 3 months because of all the fears around artificial intelligence valuations. But you can see that to kick off the new year, a name like Bloom Energy is starting to find support right around its 100-day moving average and is starting to push higher. It's still too early to say whether this move will hold or not, but so far to kick off the year, we are highlighting some movement from these companies that have been beaten down over the last 3 months. A bigger name like CEG, what you'll notice is that a name like Constellation Energy was not as beaten down as a name like Bloom Energy. Although they're both in the data center energy game, and they're both trying to take that clean energy initiative and efficient energy initiative for data centers. But you can see that CEG corrected a lot less over the last 3 months. And the reason being is because a name like CEG has a lot more revenue, and what it is a less risky stock. So you can see that CEG makes $5-7 billion in annual revenue, whereas BE is making 400 million in annual revenue. So when the market came to correct over the last 3 months, especially with anything that had to do with AI, names like BE corrected far more than a name like CEG because investors were quick to head for the exits. But the good news is, if the market is indeed turning more bullish on these names, and momentum starts flowing back to the sector, a name like BE, which is still growing revenue at a pretty respectable amount, you can see at 57% last quarter, 20% the previous quarter. If the market starts to take a more positive or optimistic outlook on these stocks, I think we'll see names like BE come back very quickly, but then earnings in the future will be a big test. So far, we're liking the move from clean energy. I will say that names like VRT and names like CEG are probably stronger contenders to be swing trades. So we're going to put CEG and VRT on our swing trade watch list. And maybe we may enter these in the coming weeks. So we'll be watching for continued strength in the coming days, weeks on these, because one day is not enough. It's still super early in the year. We don't know if this move is gonna last. Remember, the market, especially in the near term, they love tricking traders and investors. So don't be so quick to trust the early movers of the year. We are still kind of curating our watch list, curating the themes that we're going to watch over the next few weeks, and then slowly over time we'll see where momentum is really flowing, and we'll keep adding to those positions. Oil and natural gas, so a company like Exxon, while the rest of the market has been consolidating, Exxon has slowly crept up to reach new 2025 highs, and it's kicking off the new year with new 12-month highs, and it's approaching new 3-year highs. So there's a lot of movement from Exxon behind the scenes because they're exposed both to oil and natural gas. Yes, oil prices are down, and that may mute Exxon's return on the oil market. However, the Trump administration has really helped out oil stocks in the past, and they have given them billions of tax breaks since coming into office. So I think we might start seeing those breaks start paying off for a company like Exxon in the coming 12 months. And companies like Chevron, Devon, APA, and ET as well. I want to highlight ET and APA, especially because of their work in natural gas. So data centers are coming to life, which means that data centers, and a lot of them are getting powered by natural gas. So natural gas is a huge play right now. The US is pushing for it because we export natural gas to other countries, and they want to reduce other countries' reliance on Russian natural gas. So I think in the next 12 months, although there's a lot of regulations when it comes to the environment against natural gas, right now we're seeing the Trump administration kind of loosen regulations and lean in favor of these fuels. So I will say that a name like ET, which we are holding in our premium group, has a good chance of rallying. The stock hasn't done much for the last 12 months, but they are looking pretty good, and they've been basing out for about 6 months. Natural gas is going to be a valuable commodity in the next 12 months, making oil and natural gas plays a big favor because of Trump's administration and the demand for NG, which a lot of these companies have exposure to. Industrials, big movers today. Boeing, which we are so glad to see moving higher. We're holding Boeing, for those of you in our group. We're holding both shares, I believe, at an average of about 187, and we're holding calls on Boeing as well. Absolutely gorgeous setup over the last 3 weeks, 4 weeks. The stock has been rallying nonstop. They landed about an $8 billion agreement last week for new fighter jets, and they're moving again today. Remember, Boeing is a giant on both commercial and military side. The U.S. is really pushing for a stronger defense spending lately, and then on the commercial front across the globe, Boeing is seeing more orders, and they're launching. I believe their Dreamliners are starting to see a manufacturing push. And remember, in recent months, the FAA lowered the restrictions on 737 MAX manufacturing for Boeing, allowing them to produce more planes. So all of this is kind of a cocktail to help Boeing push higher in the coming years. And you have to keep in mind, aircrafts in specific are a very big contributor to our GDP growth. Anything we export outside of the United States to other countries counts towards our GDP growth. And anything we import counts against it. So with Boeing, a name like Boeing, with a name like LMT, all these defense giants and all these commercial aircraft giants like Boeing, they're going to benefit from these because the Trump administration needs US GDP to look big. Remember, one of the biggest things that he was highlighting during the time he was running for president was that he wants to see manufacturing growth. These are the heartbeat of manufacturing in the United States, and so they need to win. So 2026 could be one of those years in which we see a big push from these industrial stocks. Not only Boeing, but I also want to highlight Caterpillar. Caterpillar is a giant in anything that has to do with building anything, whether it's apartments, whether it's data centers, warehouses, digging, whatever you call it. Caterpillar is involved. And around the globe, we're seeing a big push in manufacturing, which means we need to build more warehouses. And then there's also a huge push in urban population housing. Another big win for Caterpillar. So although this stock is nearly up double in the last 12 months, there is a lot of upside room just based on spending right now and the industrial push that the U.S. has for these manufacturers. So those are as far as industrials. You can see they're definitely doing really strong today. Memory stocks, we've already highlighted Micron and SanDisk. A big bottleneck in the artificial intelligence space right now is memory. So investors are betting big on on these companies, but we don't want to just limit it to this. We also want to think about new memory stocks or maybe undercover memory stocks. So in the next 2 to 3 weeks, we will be digging into other memory stocks that are maybe not so popular to see if there's an opportunity in a smaller or younger player that we can take on for 2026, because Micron and SanDisk are up significantly already. We don't want to get caught chasing. We already mentioned China stocks. We want to talk about one more Chinese stock, which is GDS. This is a huge data center play out of China. So we're actually going to put this on our our power hour scanner for a possible swing trade. Big data center player out of China. The reason why we're watching this is because it's been kind of flat for the last 12 months, but the theme of data centers haven't changed. This company is not doing that well financially, but if there's a lot of demand for data centers, I think we'll start seeing it moving higher just based on sentiment, especially if investors start willing to become more willing to pay a higher premium for Chinese equities. Remember, Chinese equities usually trade at a lower premium because of that fear, the geopolitical uncertainty that's usual around China. But in an environment where interest rates are coming down, usually liquidity increases and higher risk tolerance is also increases. So we start seeing a move towards these higher risk assets, which China falls under. So GDS may be a big player, especially if you want data center exposure in China. It's definitely one that we're adding to our watch list for a potential entry. No entry on this just yet. Drones moving higher today. I just want to highlight one company in this space, and that's AVAV or AeroVironment. It has been a very volatile 6 months for this company. You can see that the stock had earnings. They kicked off a rally from 225 to 417 and then corrected in a matter of a few months. Anytime I see a move like that, I want to know what's going on with the company on the insides, because a move this big tells me one thing, that when confidence decreases in a name like this, people are headed for the exit quickly, and that tells me that there's likely weakness in its fundamentals. Not necessarily weakness, but maybe a sense that this is not a buy and forget type investment. This is still a speculative play. And when we look at their revenue, we can definitely see that that's the case here. You can see that this is a company growing revenue at a very quick pace, which is impressive at 150%. But in the same time, that revenue is only 470 million. That's pennies. That's pennies for the stock market. It's absolutely nothing. Plus, the company's losing money on its net income. Balance sheet is still sort of weak, and free cash flow is negative. So when confidence grows, perhaps there's a positive catalyst about drones. Perhaps there's something that the company reports that excites investors and the market overall is in strong momentum. This one will go quickly, but at the same time, just as quickly as it rallied, it can quickly sell off at the sign of any uncertainty in the market. And yes, that's exactly what happened over the last 3 months. Now, to kick off the year, the stock is up 5%, but it's still right around that 100-day moving average. The stock, I wouldn't say, is ready to hold any rally. It's a good name to watch out of the drones space for 2026. But as we are bullish on drones, because military drones are a huge push, and we are bullish on drones in general. But I would say it's a little too early to say that they're going to come back in the next 1 month or so. It might take a little bit more time. Space and defense. So defense, the US is pushing big on defense spending. It's part of Trump's big, beautiful bill. And we can't afford not to advance on defense spending. We want to maintain leadership, which means we have to continue improving our defense systems. And that's why we're seeing a big push from defense to kick off the year. We know that Trump's agenda is peace through power, and we know that there are wars going on across the globe. General Dynamics is already kicking off the year with a 1.6% gain. It's sitting right above its 100-day moving average. One of our favorite plays for defense, because they are a company working on, this is not their specialty per se, it's not where most of their revenue comes, but they are a company working on nuclear submarines, and Trump is really pushing for submarines and aircrafts, something GD is really well known for. When we dive deeper into GD, we can see that the company is a giant. They are making about $12 to $13 billion in quarterly revenue, which has been growing at a steady average of about 10 to 12%. Net income has been strongly positive, and it has been growing. This is only expected to improve as interest rates fall. This is an industrial stock. It's also a manufacturer, which means that they have very expensive overhead, but lower interest rates environment will help them kind of surpass that overhead expense. The company's assets, you can see that they have a healthy balance sheet, and as far as free cash flow, it's positive. It's not super strong, but it's still positive. This is one of our favorite picks for 2026 at a $92 billion valuation. I think it could really see an upside move, especially with all the defense spending. So we're going to go ahead and add GD. We already have this in our watch list, in our official watch list over the last few weeks, but we're going to re-highlight it again for 26. Big favor for defense spending subs. Okay. LMT, another big player, of course. AMTM, Rocket Lab, and ASTS. So we want to highlight Rocket Lab and ASTS because of their space involvement. So over the next 2 to 3 years, I think we're going to see a lot of focus on space stocks. And I'm not talking going to Mars. I'm talking about satellites, defense purposes, and then of course the International Space Station. I've already mentioned a few times that that NASA will be deorbiting the International Space Station in 2030, and they're finding a replacement. But this time, rather than relying on governments, the government spending, they're going private. So they're going to look for companies that can send International Space Stations, plural, more than one station, into space to replace the current ISS, which means that there's going to be a lot of contracts being handed out. And that's not the only initiative right now for space. They're also looking at data centers that are going to be built for space. And then they're also working on space satellites, and then a defense for space, of course. All of this is a signal that we're going to see more movement in space stocks. Rocket Lab is a company that takes things to space and brings them back. SpaceX is the same way, and they also do satellites. So all these companies, they're already seeing a big move over the last 12 months, but we can continue looking at them over the next 12 to 36 months as we get closer to that 2030 mark, and as AI increases the developments in the space. Now, we are holding a company called Voyager. For those of you who are in our group, Voyager is a stock that is considered one of the favorites to replace the International Space Station. So this could be one that that could be a big winner over the next 2 to 3 years. However, what's important to note about these stocks is that the majority of them, and I'm going to pull up Voyager here, the majority of them have very little to no revenue. So a lot of them are speculative, you guys. So if you're looking at space stocks right now and you're bullish on them, make sure you dive in a little bit deeper and look at revenue trends. If they have zero to little revenue, like in the millions, these are still speculative, and they're highly tied to landing contracts, displaying viable products, and then of course giving a path to profitability. So be careful when you're buying these companies. They're not super safe to buy and hold yet. However, there are companies like LMT, which is Lockheed Martin, which is already involved in space exploration and defense. This is a reputable company that has billions of dollars in quarterly revenue that's also going to benefit from this space race. So keep that in mind as you're investing over the next 2 to 3 years. You want to find out what kind of company this is. How much revenue are they actually pulling in? Are they speculative or are they solid? A company like Lockheed Martin, we would buy a lot more because we're more confident in a company that makes billions. And then we'll buy a lot less from a company like Rocket Lab, which is a company making hundreds of millions, not billions of dollars. So that way we kind of keep our risk adjusted accordingly. So yes, again, all of these companies, space and defense, big movers. For those of you watching, go ahead and give me a thumbs up. We have some viewers on. I would like to know how you guys are feeling. If you guys like the pace that I'm going at. Do you want me to slow down? Do you want me to cover anything in specific? I'm going to talk about semiconductors right now, and I'm going to go over this list and start probably making some charts. And then, of course, we're going to get into our scanner to see if there's anything we need to highlight from the scanner. Let's kind of go over what we're doing, what else happened today while we wait. I'm going to put this at 3 p.m. Eastern. Okay, so what has happened today other than these sector highlights that we've talked about? BYD dethrones Tesla as the world's biggest EV maker. Let's see how Tesla is reacting to this. You can see that the stock has sold off. It's down 2% today, and it's below its 50-day moving average. So Tesla's deliveries, of course, took a big hit because of the political issues that happened with Elon Musk. But don't forget that in September, the electric vehicle credit ended for electric vehicles in the United States. So prior to September, the U.S. was giving buyers $7,500 as a credit towards an EV because of Biden's clean energy initiative. But that ended in September, and it definitely hurt Tesla's sales, and you can see that the stock is selling off. Let's go ahead and make a chart for Tesla, because I know most of you are probably wondering when is the sell-off going to stop. We had a support at 460, it broke right through. Now Tesla came down to a low of about 435. So we're gonna place a support actually right here, right around 430 for Tesla. So for those of you watching Tesla, you kind of wanted to defend 435 to avoid a sell down to about, I would say 385 to 400 would be the next support right here. There we go. So that's Tesla right now. I would say that it probably needs to get above 473 for it to really get back into safer territory. So BYD, which mind you, EVs are not even their main business. EVs are they're like Ford. Imagine Ford started an EV business and started selling more EVs than Tesla. So that's huge. That is a big win for Chinese stocks, because remember, BYD is a Chinese company, and already to kick off the year, we have BYD beating Tesla in sales. We have a company that's AI listed jump 74%, pushing Baidu and other Baba stocks. So already we're seeing a lot of attention in Chinese stocks, something to highlight to kick off the new year. Between BYD dethroning Tesla, and Baidu jumping, we saw the Hong Kong exchange or stocks jump the highest level since 2013. So the best year since 2013. Apart from that, chips, of course, started off the year 2026 strong. That's when we're going to circle back to semiconductors here. And then let's go ahead and jump into semiconductors before we jump into our swing trade scanner. Nvidia kicking off the year strong in the morning, slowed down by the afternoon though. You could see that. This is why I'm very skeptical of trusting stocks early on in the day, because early movement doesn't guarantee end of day strength. So you could see that Nvidia has started off the day strong, but they sold off into the day. The stock is back down to about the same level that it's been at over the last 5 days or so. The highest or the high that I would like to see it break above in order for the stock to kind of have continuation is about 195 to 196. Otherwise, it's still at risk of moving back down to that 182 mark and consolidating sideways. Remember, Nvidia is now trading at a massive market cap. Nvidia's market cap of $4.6 trillion makes it a very hard stock to move because it's such a massive market cap. So it needs a lot of buyers. It's not as easy to move as it was when it was a $1 trillion or $2 trillion company. So it needs a lot of buyers to get it going. And right now, there's just not a strong enough catalyst around AI or around Nvidia in specific that will push it higher. Why did a company like ASML move? The ASML is involved in AI, but why did that move, not Nvidia? Because ASML is involved on the manufacturing side. A company, whereas Baidu and another AI company is actually more threatening to Nvidia than it is for a company like ASML, which benefits from increased spending on AI. So that's kind of the reason why we saw Nvidia lose its momentum today, but names like ASML, names like TSM, they continued their momentum because they're on the manufacturing side. They make money no matter what. Whereas Nvidia, if another Chinese name comes up with their own semiconductor that's better than Nvidia's or matches Nvidia's power, then Nvidia is not going to be the only leader anymore. So over the next 12 months, we may start seeing Nvidia and AMD and other names like this moving sideways, whereas names that are responsible for manufacturing semiconductors and in the manufacturing side of AI, like TSM, like ASML, like AMAT, for example, these might start gaining more attention. Let's see what AMD is doing. Let's build up a chart. Kenneth, thanks for hopping on. So AMD is still around the same range that we left it last week. However, it is gaining a little bit today. The stock is still kind of stuck between 180, 190 to 240 though. 240 being the high it needs to break before it can see that all-time high mark again. Big support around 188 to 198. Quite honestly, I don't trust AMD to either side right now. I am leaning more bearish. I feel like there's going to be a correction in AMD in the coming weeks, and Nvidia maybe up until earnings. If earnings season goes good for semiconductors, then we'll see a big push. Earnings are scheduled for February and for AMD. MU and ASML, we've already highlighted them. You can see Micron broke right through resistance, did not even care one bit. So it's one of the strongest stocks to start off the new year. And TSM, of course, already sitting above all-time high for the new year. Very big move. Super impressed by the market to kick off the year. Now, in about 20 minutes, we're going to start. We're going to go through our Power Hour scanner. For those of you who are in our group, a lot of our setups are already moving higher today. It's a solid start to the year. So, VLO, for those of you in our group, having itself a day, 20% gain today. We're holding VLO. Also holding ALMU, also having itself a comeback. We're still holding this about the same average so far. Voyager, I've already highlighted this. This is a game. This is a name that's involved in space, and it's one of the favorites to get awarded the contract for the International Space Station. They've won a couple contracts from NASA already. Very good movers so far. We could see that SPY came down to retest 680 to 682, which is a massive support, and it held so far today. So it held right around that 680 mark and reversed. Pretty good signal going into next week that we're holding. And I'm going to go ahead and close my SPY calls because it looks like we're just kind of stuck around this range. Closing. These are just my short-term calls here at 0.22. Okay, so I'm out of those SPY calls. That way they don't drag us down into next week. Cool, ended up getting out at 0.23 on those. Such a beautiful move from VLO. Honestly, it kind of shook. It tried to shake us out. Look at all these downswings, violent downswings every day, but we held through. And look at the stock breaking out. Remember, this is a company working with SpaceX, and they're working with Anduril, so it's a high risk, high reward speculative stock, but they've got some customers under their belt. So one of my favorites so far going into the new year. It's not a buy and forget type investment by any means, but they're landing the right customers and they're coming out swinging. So I will say it's one to watch. Let's see. Wow, 22% day on Velo so far. We're holding this, you guys. For those of you in our group, this is a pretty big run to start off the year. Um, You know what's also impressive today is Boeing. We already talked about Boeing, but look at this thing is still going into close. This is a very big green flag to start off the year, especially after dipping in the morning, and buyers were quick to buy that dip, continuing that move. It looks to be headed for a new 52-week high. So Boeing, big name to watch. Let's create a chart around Boeing actually. That way we can kind of get an idea. So you can see that it's far above that resistance we had for it since we last created a chart. So let's get rid of all these. Resistance is going to be around 244, and that comes from its highs in July of 2025. And then the resistance that follows, I think, dates back to, yeah, this dates back to 2023. So above the 244 mark, Boeing is heading towards its 2023 highs. Again, big favorite in 2026 because we need it as the US for their exports. Um, I'm loving the start to the year for Boeing. I'm loving the start to the year for a company like GD. Notice a company like FTAI is also having a massive week. This is a company that's out of Canada that's also involved in aviation. We're seeing big movement in aviation so far, you guys. So maybe we start seeing a theme in the next 12 to 24 months of more activity around aviation manufacturing, or anything that has to do with building airplanes, aircraft, drones, and anything of that sort. Um, in about 10 minutes or so, we're going to go through our Power Hour scanner, and we're going to highlight any specific stocks that we're going to be adding to our watch list. It's Friday. For those of you who are in our group, I'll be sending an official watch list on Sunday morning. For those of you not in our group, if you need the link to join, please let me know in the chat or in the YouTube chat, and I can help you out. All right, guys, in a couple minutes, we're going to get into our swing trade scanner. Just a couple more minutes, and we're going to pull this up and we're going to go through all this together. And we're going to highlight some of the bigger movers today. We're going to go through their fundamentals, some technicals. That way, we can kind of find some early year movers, potentially some swing trades for next week, and then things to put on our watch list in general. So, just a few more minutes. Thank you for those who are on, and for those of you who are just joining. And if those of you who are on have any questions, or if you guys have any suggestions, let me know. Like perhaps turning the music down or off, or anything of that sort. Just let me know. Cool. 2 more minutes, and we're gonna start going through the scanner. It's nice to see that Velo is on here because we are in this. So it's always nice to see that one of the biggest movers of the day is a stock you're already in. And that's the difference between being prepared for a move and chasing a move. If you're chasing a move, you're kind of, you've probably already bought too late into the rally. But every once in a while, you'll find a stock way before it breaks out, just because you did your due diligence, because you looked at its fundamentals, which will always kind of be a indicator of where a stock will go. So if you look at its financials and its fundamentals, and the company is doing well, or it's in the right sector, you get in early before the breakout, and then you enjoy the breakout rally, and you have a good average. That's kind of the basis of our investment and trading theory at Hyperstocks. 1 more minute, we're going to start going through the scanner. I can't wait. There seems to be a lot of good picks on here. I wonder if they're actually going to be good picks or not. GPUs, that's a pretty interesting acronym. It's 28-cent stock, probably makes 0 revenue. Let's go ahead and see. All right, so let's just jump right into it, guys. So I filled up the scanner. It's a few different settings that I have on here, and it just represents the top gainers of the day that have the strongest relative strength. I use the scanner for a lot of my trades to find a lot of my swing trades. 90% of these stocks are not going to be great. However, 10% will give us some kind of setups or something to watch over the next few weeks. Or at least the next few months sometimes. SOC seems to be a reputable name. I like these stocks are between $10 to $20, but I'm not afraid to go higher or lower if I know the name, or if I find maybe it's a hidden gem that's in the penny stock range. SOC is an oil and gas company, it seems, so far. So that's one theme that we can highlight. Oil and gas seems to be moving today. UAVS is a computer hardware, but this is a drones company. So already we're seeing a drone company moving. Aerospace and defense, that's also in the aerospace, perhaps drone space. IRDW, semiconductor space, computer hardware. So another computer hardware stock. Electrical equipment. So a lot of stocks moving within the semiconductor electric space. So far today, another aerospace stock. So we've already found 3 different aerospace stocks on this front page of the scanner. That tells us that there's a lot of movement in aerospace, which perhaps indicates that we can see opportunities in that space. We already are familiar with a lot of space and defense companies, and we've already listed them here. And this only confirms our bias towards aerospace. It confirms what we've already found, since these companies are some of the top gainers for the day. Baidu, this is a Chinese company. You can see that this was already a company that we highlighted. So a lot of these companies so far seem to be reputable, and they seem to be pretty tradable. Second page of the scanner, APLD, this is a data center company. So again, data centers have to do with semiconductors, and they have to do with AI. So we're seeing a theme here. Serve, this is a robotics company. Capital Markets is a Bitcoin company. So ACMR, this is a semiconductor company. So we're starting to understand a theme here. ONDS is a robotics company. So let's go back to our first page. It seems like there's definitely a lot to look at, a lot of opportunities. I hope we can cover at least a few good ones, or at least find a few good ones off this list. So first thing we're going to pull up is going to be SkyT. So SkyWater, this is a semiconductor company. So SkyT is up significantly today. Let's see what the company's fundamentals look like. This is a $1 billion company, and it's trading at a price to earnings ratio of 7. I'm already impressed. Now, don't jump the gun or anything, but I'm already impressed at the fact that it's trading at a 7 price to earnings ratio, because this tells me that this is actually a profitable company. Because if they weren't, this would not have this. They wouldn't have a positive price to earnings ratio. So they are profitable. They managed to make $144 million last quarter in net income. This is a big reversal from before, where they were losing money left and right. Revenue, however, is still very weak. And this positive net income is not consistent. So this tells me that this may have been just a one-time write down that helped them achieve profitability, because that's very hard to make 145 million off of 150 million in revenue. But nonetheless, decent company with decent revenue, positive balance sheet, but not that strong, and negative free cash flow. $1 billion company. Why is it moving? Let's go ahead and review if the company has anything that's moving it in specific. It looks like there's been some insider selling. Nothing truly specific, but the company is moving based on its overall semiconductor space movement. When we're looking at a company, we want to see that the fundamentals give us conviction to hold. And right now, I don't see any conviction from this stock. It is moving, and it is notably higher. And it does have a pretty decent chart, but I don't see anything in the fundamentals that's really too attractive. So I would put this perhaps as a stock that I would take based on technical analysis, not fundamental analysis, and perhaps based on catalyst driven movements. So if you are in SkyT or looking at this stock, these are some levels to go off of. 24.25 would be the resistance. That's next up. And then you have your support right around 19 for now. Not really a stock that I would want to be stuck in, perhaps. If the stock does maintain this breakout right around 21, I would say there's a good chance that it rallies higher, but I'm not a big fan of its fundamentals. I don't see anything special. So moving on, let's see if there's another stock on here. So Velo, let's go ahead and pull up Velo. We've already covered it a few times, but we want to cover this because we are holding Velo, and it's a company that's working with Anduril and SpaceX. So this is a company to see. There we go. So they've actually signed multiple agreements. We can see that they material agreements, private placement material agreements. It looks like, let's see if they say who it is that they signed with Lake Street Capital Markets and Lucid Capital Markets. So this only adds to their arsenal, because we saw them announce a deal with Anduril. They announced them as their customer, and they are working with SpaceX on their rocket engines. So 3D is a huge opportunity. We already highlighted a company like XMTR not too long ago. This is a company that we've been talking about since they were in the 20s. Velo is a young name that's already promising. However, I will point out that the company's fundamentals are still high risk. This is a company still making $10 to $15 million. So a lot of their future rides on their ability to, one, deliver to their customers, deliver on the new contracts, and land more contracts. But at $352 million, this is a super attractive company. You can see that 60% of their shares available to the public market are being internally held. So their insiders really believe in the company. So I will say Velo is going to be a big name working with SpaceX and Anduril. So this is a big name to watch in the space. And then I want to see just one thing about Velo. I want to take a look at how much of their float is being shorted. It's a 13% short float. So this is a company that's susceptible to a short squeeze, you guys. So if there's a lot of demand for their shares, which there's only 8 million shares available to the public market, we can see a big upside move just with a little bit of volume. So continue watching Velo, which is about to hit 17, which is another new high of day. The stock has been rallying all day, up 23%. We are holding the stock in our group. For those of you in our group, Um, Cool. All right. So that's Velo, another name from the scanner that you could see. That's just right off the scanner, you guys. RDW. This is another aerospace name. Let's go ahead and pull this up to see if there's anything in the fundamentals that stands out. $1.5 billion company. A lot of internally held shares. It's Critical Space Solutions Company, which fits in our theme of space and defense. Remember, we talked about this earlier, right? And so with that being said, fundamentally, there's not a lot of strength here. There's a lot of money being spent on research and development because going to space is a very expensive task. Nonetheless, this is a company that's gaining a lot of traction, perhaps because of projects that they're working on. So RDW, good contender for a watch list play, and it's approaching its 9.65 resistance. However, I will say this is a speculative name. It's not a name to buy and forget, so you want to position appropriately. Price target on this, because it's such a strong mover today, above 9.65, I would say price target is going to be around $12. So we're going to actually add RDW here to our official watch list. Name in space, in critical space exploration. Speculative name, really, but still a pretty big mover to start off the year. Let's see what else. Baidu, one of the biggest movers today is BIDU, and this is a name out of China, you guys. So not the usual Alibaba. This is Baidu this time, taking the reins, I think up 15% today. Baidu is not only a company that is out of China, it is a good company out of China. It's one of those names that has just been beaten down over the years because let's look back a little bit. So in 2021, Chinese stocks were on fire. Baidu was trading around 355. Alibaba was worth way more than it's worth now. But over the years, because of deteriorating relationships with China, because those valuations were just way too hefty, and because of uncertainty around Chinese regulations, people started selling off and de-risking their portfolios from China stocks. And that occurred for years and years. However, lately it seems like the narrative is turning around, and that is because of the help of easing interest rates and then confidence getting restored. American investors are already willing to pay a super high multiple for American stock, and right now the S&P 500 is trading at a multiple of around 28 price to earnings. So with that being said, as investors are willing to pay more and as risk tolerance increases, they start looking for opportunities outside of the current risky assets. And one of the cheapest assets on the market right now by price to earnings ratio are going to be Chinese stocks. Baidu in specific, if this loads, Baidu in specific, sorry, let's go ahead and wait for this to load, is currently at a $46 billion market cap valuation. The company has is bringing in revenue of about $18 to $19 billion and is profitable. But you can see that it's $46 billion. I mean, for a company that's making $18 billion a year, it's not too expensive, especially if you look at deeper into their financials, and you can see they have positive equity of $39 billion and free cash flow is also positive. So a company like this that's moving into AI, that's launching their own AI capabilities, that's going to start attracting American investors. And to kick off the year, we're already seeing moving higher. But you don't want to trust a name like this so fast and so easily. Just because it's moving so early in the year doesn't mean it will last. I'm always skeptical of Chinese stocks, especially with early rallies. So I would say this is a name to put on watch, but not necessarily jump into. I want to see how this does because, yes, the AI narrative is great, but when we look deeper into the financials, we can see that revenue hasn't been growing. So for us to take confidently take a trade on a stock like this, we want to see revenue start moving back into the right direction. So this could explain why investors are not willing to pay that much of it for it. But when we look at a name like Baba out of China, for example, this is a company that's consistently has been growing revenue, unlike Baidu, and they're also taking their own AI initiative. Baba might be the better choice, just given the fact that the company's revenue is growing versus Baidu. So the next big thing to watch on a company like BIDUI is going to be BIDU is going to be earnings in March. This rally may get supercharged if those earnings are strong, but if those earnings all fall again, kind of into the same pattern of that negative revenue growth, I would say this stock is probably going to correct on those earnings. Let's see what else is moving. SMR. I know nuclear is a big name. SMR, for example, was a really popular name to trade last year. In 2025, that is. Stock reached highs of 57, corrected back, right now trading around 16. This serves as a good reminder of how quickly stocks correct when there's uncertainty in the market and when they don't have much revenue to speak for themselves. SMR was really big because nuclear power and small nuclear reactors became such a hot play in 2025. But when that fizzled out, or then there was fear around valuations introduced in September, these companies that have little to no revenue, your SMRs of the world and your other little nuclear stocks, they corrected very quickly because they don't have strong fundamentals. Investors were quick to head for the exits. Right now, the stock is bouncing to start off the year, but I would say it's far too weak of a bounce for us to say that's considered a safe bounce where it is right now. So not a big move from SMR for us to put it back on our watch list of any sort. Still has a lot of work to do. I like these gap up and go stocks, these big gap up stocks, or anything breaking above a resistance, or anything that's been loading up into a breakout. Those are going to be usually the biggest winners. Let's see if there's anything else. ACMR, GDS. Let's review GDS. This is out of China. This is a data center play. I want to review their fundamentals and then I will make a chart on them. Looks like GDS has been revenue is still in the millions, not in the billions. So you already when you see that, you have to kind of think, okay, how much conviction can I have here? How much should I risk into this? Because these guys aren't making that much money, but still growing at a pretty respectable rate of 10 to 12% over the last 3 quarters. And they've ramped up growth. Notice that they were growing at 1%, 5%, 9%, 10, 12, back to 10. So pretty decent revenue growth. Net income is back and forth, not consistently profitable. Pretty decent balance sheet. Free cash flow is positive. $7 billion company, not too bad, especially if the AI trade gets hotter and hotter out of China. So these guys build data centers in China. So similar to what NBIS would do here, or APLD, or perhaps any other data center play, GDS does it in China. And because Baidu and other Chinese companies are building AI capabilities, GDS may land those contracts. So keep that in mind. This is a company that's now gapped up and saw a rally after its gap up on the first trading day of the year. This could be a big indicator for them. We like them as long as they hold this trend line, and then resistance is going to be close to 44, which would be actually the next price target. So around 44, which would be their next price target, and support is going to be right around 35. So I'm going to actually go ahead. We've already highlighted it on our Power Hour scanner. Velo got stopped at 16.97. It couldn't hold. It couldn't get through 17. Let's see if buyers are willing to pay 17 for it. I think if that stock moves to 17, it's going to be an after hours. It's had so much momentum today. Probably after hours, they'll come in and buy it at 17. All right, guys. Well, for those of you who hopped on, I'm gonna hop off. Thanks for joining. I think I'll be on probably the last hour or two of the day going forward. Next week, I will be at CES, or the Consumer Electronics Show, so I'll have to see how my schedule looks. I can't be guaranteed to be on. But I appreciate you guys always showing up and supporting, and Happy New Year again, and thanks for hopping on. Good luck.